Yeah, we found a place that we really like. We are keen to make an offer, but I just wanted to double check that what you sent me is still accurate
valid.
and we can still count on that.
Yes. So I'm just opening up the outcome that we have.
Yes.
That we did 2 scenarios, but they were like pretty close to each other in terms of the outcome. One is, subject to the sale of your existing property, and the other one is, should you keep the existing property? So it's pretty close to each other, because the reason for that is there's a capped ceiling limit that the banks take when you are scored for, firstly, a third of your gross salary. So that sets the precedence of how the application will flow. So the max ceiling amount is always based on a third of your joint gross salary.
Okay, cool.
So that's why you'll see there's sometimes very little difference in the rest of the assessment, because that sets the tone for pretty much how the pre-approval flows, right? That's your ceiling limit. And then they take up to an 80% of your disposable income that's available. So you can see, like, of that's left of your disposable, 80% of that was taken, all of it was taken, but that cap ceiling limit comes into effect of the third of your gross combined salaries. So if we look at, I just want to open the pay slips quickly. Although one thing I don't think we factored in is if we took in an indication of rental on your existing property. I just want to double check. And then yours was gross 30, so that's a 70,000 combined. So if you were to keep the property, you obviously would plan to rent it out, right?
Yes.
What would you say is a conservative monthly rental that you could that you could potentially secure as a tenancy, long-term tenancy agreement, a 12-month or 1 to 2 year, let's say, tenancy agreement? What would be the monthly rental on that existing property?
I think the number that comes to mind is 15.
So the banks take a certain percentage of that future rental into consideration, because, of course, it's not something that is currently being earned. So I'm going to take 70% of 15 into account, right, to come in line. And then let's just say that's an extra 10,000. So I'm going to put your gross at 80. If we keep, this is the scenario where we're keeping the existing property, right, and renting it out. So it boosts our affordability up slightly. So from the 2.1, which is if you keep your property, 2150, 2160, that's where we landed. It's now moved up to 2520. So 2520 over 30 years if we add the future rental income percentage of the existing property.
Is that amount, will the bank give that upfront, or will they need to have a proof of rental income for X amount of months? How does that work?
Very good question. I've literally just secured an approval from FNB where all they require is a copy of a signed lease before the transfer takes place on this new purchase. So you'll just have a signed lease with a potential new tenant. Yeah. Prior to transfer. Prior. So even, during the process of our bond application, all you need to do is just perhaps request from the agent that's selling the property to yourselves to give you a rental appraisal on your existing property.
Rental appraisal
on your existing property for that 15,000 that you mentioned. And we add that then to the affordability assessment for the bank. So FNB, Absa, and Nedbank are the 3 banks that will consider future rental, a percentage thereof.
FNB, Absa, and
Nedbank.
Nedbank. And that's all the same without, you just need the lease. You don't actually need the income yet.
Not as yet, no. It's called a future rental. Yeah, it's a future rental. But what we will need as part of the application, as mentioned, is the rental appraisal from the agent.
Okay.
But it's on your property, right? It wouldn't be on the new property you're buying.
Okay.
Yeah, so then you can shop
agent.
for the
Okay,
2.5 range, which,
Yeah.
you know, and you wouldn't be forced to put in a subject to sale clause on the new purchase, which actually is much more advantageous than, going in subject to sale, because as we know, sellers are not keen to accept subject to sale offers at the moment.
Okay, so we actually would prefer to keep our property and rent it out. So that is
Good
our
news.
ideal scenario. And that also then helps that we don't have to have someone in the place beforehand, because then we'd be moving twice or three times.
That's right, yes. It's convenient that way. Yeah. And you could just, once the bond is in place, you could then, 9 times out of 10, the agencies that find that you are signing the new purchase with will be able to find you a potential tenant, to sign a new lease with. Because you'll have about a month to secure that lease prior to transfer and registration, at least. A month or so, yeah, just about.
A month or so. Okay. Prior to transfer. Okay. That is very cool. So I just wanted to double check that those numbers are still accurate, because it's been a month now since we started that conversation. We found a place that we really like. We are keen to make an offer, but I just wanted to double check that what you sent me is still accurate,
valid.
And we can still count on that.
Yes, absolutely. And actually, it's valid for a period of 90 days, the assessment.
Okay.
So, which is quite nice. And then if in that 90 days, let's just say the interest rates at the banks would have maybe changed and increased slightly. Let's just say the Reserve Bank met, and then they decided to hike the rate. That would have impacted the approval outcome of the facility that we could secure, or potentially you had a job change and it decreased your salary. Those kind of things would negatively impact your assessment if in that 90 days those kinds of things changed. But in your case, no. In this case, we can actually get a little bit more if the purchase price is higher than the 2150 marker that we initially confirmed.
That is great. That was, I think, all my